Hey, good evening, folks. How y'all doing? Kunal here, Bulls on Wall Street. Hope everybody's having a great start to September and are ready to get back to work. We had a really interesting week in the markets last week with really a full-on bounce starting to materialize after we had this initial flush, and so the price action's been the price action the last few days has been pretty good, even though we are seeing some intraday weakness as the rallies have been getting sold off. That's natural when you've broken so many layers of support. And then when you add in the intraday volatility due to the news about Syria and things of that nature, that adds a little bit to, those ranges kind of fading intraday. But we are starting to see some positive price action and some constructive action happening underneath the hood of the market. And so I think that's a good thing. So kind of the way I'm looking at this thing, for this next week, as the market, did have a nice move after, after this flush. One of the things that we'll really need to watch is, we need to take out this 50-day moving average and really take out this prior high, which is about 1670. And if that happens, that can kind of set us back into the range that we have been in. One of the things that we really need to watch is, if we do fade back here from the 50-day moving average and take out, this past week's lows, that will really kind of get us into a much more bearish kind of thrust. And at that point, I'd become very defensive, as we might see, S&P 1600, 1575 on the test of that 200-day moving average. One of the things that we'll need to watch, if you're looking at smaller time frames, when you're looking at the daily chart, it's great, but sometimes you need to look at the smaller time frames to kind of get clues of really what's happening with the markets. And so one of the things that we can see is we've kind of built a double bottom here at that 1627 market. So that's what we do need to see hold, in this coming next couple weeks. But we have here almost an inverse head and shoulders type pattern here. And so if we can take out this 1670 mark, that will put us right back in the range to kind of attack those August highs and really clear out some of this mess that happened of recent. I think we started to see some positioning into that last week as we saw a lot of the momentum names like stocks like Yelp break out to brand new highs, and so you already saw some of that institutional positioning coming in as historically, when we have news of war and things of that nature, the market gets really volatile and you start to see these dips. But once the action and things, start, then it's more of a business back to usual. And that, along with, obviously a positive influence from the Fed and also summer ending, we might see just a run right back into this if we can clear out that 1670. One of the things that we should be watching, and I'll be watching closely, is the Nasdaq. As the Nasdaq was, out of all these indices, the only one that didn't crack its 50-day moving average. And you can see here, one of the clues that'll tell us if this bounce is going to hold and follow through is that we're right basically at highs here on the Nasdaq. If anything, we've got kind of like a quadruple tap breakout formation there. And we are a little bit extended as we kind of came back down to support and running right back into resistance. But the Nasdaq can follow through and move to highs. That will be a clue that the rest of the indices will hold their lows, and so we can look at this leader as one of the clues that we need to, kind of position ourselves. Let's take a look at the Russell here. So the Russell was the weakest last week, only up 0.25%. It is looking very similar to the S&P in a lot of ways. So you can see here, we're trying to build above this 50-day moving average. It's having a little bit of resistance here, but if we can kind of break and close over that, that might set us back into the range. But I think that we'll need to watch really that Nasdaq for really clues on what the heck is going on with the rest of these bad boys. The Indian markets had a real huge pop last week after so much bloodshed over here, and a lot of this has to do with the rupee getting devalued on a daily basis and all the other things that are happening in the emerging markets. We were due for a snapback in here, but we're getting kind of right back into resistance. as this $50 mark was a key breakdown on the INP. So it's probably, the run is probably over for it for now. FXI, you know, the Chinese markets now, they did get a nice close and break over that 200-day moving average. So it looks like, you know, we're kind of going to attack this 38.39 level. But we've got a lot more constructive formation out of this one, especially if we can kind of consolidate for a couple days. It might give it an additional push. So I do like the way this is shaping up, you know, compared to the Indian markets. USO. So USO is the ETF that we use to track oil. And you can see here we kind of came out of range, and that this is a natural move, right? With all the news happening overseas and things of that nature, to have a push in oil is normal. We really haven't gotten as crazy as we've gotten in the past, and so we'll have to keep an eyeball on that. But a lot of oil stocks and oil drillers do look decent, so that'll be one of the sectors that we'll keep an eye on if, you know, we get some more mayhem in the Middle East. Home builders, nothing going yet. You know, we held this key level here at 28, and that seems to be the big support for now. But you can see we're just kind of sandwiched in, right? We have a lot of supply overhead and a decent amount of support under. And so until this kind of clears itself and resolves itself to the upside or downside, we'll get choppy action in the home builders. And so that's probably a sector I'll stay away from for now, till we see, you know, an upside breakout or a downside breakout in that. Silver, a decent bounce on Friday, but, you know, overall for the week it was, you know, basically flat. After this monster move, we came back and tested the, you know, 20-day moving average, and we're starting to have a mini bounce here. But probably the easy money in silver is over for now, as, you know, we have a key kind of resistance point here at 24, and so, you know, any short-term targets would be at that level. So we have only a little bit of upside left, unless, you know, we can build on this level and kind of base out and then take out this 24. You know, that would lead to a gap fill, and, you know, we could run to maybe the 200-day moving average or 26, and so that'll be something we watch over the next coming weeks. Gold, similar type of move to silver, right? You know, after this monster move, we're just coming back down. And so we don't necessarily have any pattern that we can trade off in here that says, hey, gold is going to go higher or lower. This is probably one of those sectors that right now is just neutral, and until we get a nice setup in it, I'd leave it alone. So that's it for the major indexes for this week that we need to keep an eye on. Now, once again, we're not out of the woods in the market. We are starting to see some constructive action in the markets, but the key thing is to remember, right, your best case and kind of worst case and neutral case scenarios. You know, our best case scenario is, right, that we take out this 1670 level, and that will pretty much set us back towards, you know, the highs of August. And worst case scenario, you know, we take out this 1625 and, you know, next stop 1600 and then the 200-day moving average. And then a more neutral case scenario would be that we just kind of chop around between, right, our lows here and the 50-day moving average, and just try to, you know, build something. So we don't know exactly which way it's going to happen yet, but I will say that, right, Thursday and Friday, even though the markets were acting wild, and that's normal in a news-driven market, there were a lot of individual stocks breaking out and a lot of constructive price action and speculative money flowing into some of the momentum names. And so that's something that we'll keep an eye on in the coming weeks. So that's it for now, guys. I will be up with a watch list in a handful of minutes, and then we'll go from there. Take care.